Hello and welcome to another financial analysis video. Today we're talking about Verizon, which reported earnings and they beat by 2 cents a share, $1.04 versus $1.02. Verizon has undergone some changes in the last few years. They bought out the Vodafone stake that owned almost half of Verizon. And in order to do that, they had to obviously sacrifice some equity and sort of restructure the balance sheet, take on some liabilities. In doing that, at one point, leverage had spiked over a 20-to-1 debt-to-equity ratio. It has now come down to about 15-to-1, which is important to note. I really wanted to keep an eye on this and would like to see the debt-to-equity ratio for Verizon continue to drop. On the return side, because of that low equity number, return on equity obviously has ballooned. So really, investors should monitor return on assets to get a better indication of underlying operating performance here, or at least for returns. And it is consistently building strength now over 6%. Earnings per share, quarter-to-quarter movement of trailing 12-month earnings continues to build momentum. We're seeing some growth here. We're also seeing growth in revenue, trailing 12-month revenue as it moves along. It's slowly but surely continuing to grow. Another way to look at it is right here. We can see the momentum in trailing 12-month revenue for Verizon continuing over the $130 billion mark. Cash flow and free cash flow is a little more flat on a trailing 12-month basis. However, it's still, in my opinion, very strong. Nothing really to raise an eyebrow on there. The last thing I wanted to note, and this is in regards to the price-to-earnings ratio, trailing PE now a little over 12, forward PE at 11. So somewhat of a value play emerging here. And another way I take a look at it is through the PE curve. This is trailing PE and forward PE over a period of a year, and we could just see it dipping. That demonstrates emerging value, or as I like to call emerging value. Another way to look at it is the earnings yield. This is an inverted look at trailing PE and essentially says if earnings were the only indicator of share value, this is what a shareholder would expect to return. With that being said, seeing the earnings curve build, or earnings yield curve build, means that the share price of Verizon is growing at a slower rate than the earnings. So definitely emerging value there. Overall, I'm a shareholder of AT&T, so I don't see the need necessarily to jump into Verizon, but Verizon is definitely a strong company and definitely worth a look here at in the mid-40s. I do believe that this stock will cross into the low 50s sometime between now and the spring of 2016. I hope you enjoyed this video. Happy investing.